Have you ever looked at a financial chart and just seen a chaotic, jagged mess of red and green lines? Well, if that's you, you are in exactly the right place. Today, we're going to learn how to decode that secret language. Welcome to our beginner's guide to candlestick patterns.
You know, at first glance, a stock chart can honestly look like pure random noise. But what if it's not? What if there's a story hidden in all that chaos? A story about buyers and sellers, about fear and greed, a whole narrative told through these simple little shapes.
So, when it comes to trying to understand the market, there are really two main camps. First, you've got fundamental analysis. Think of this like being a detective, digging into a company's balance sheets and financial health. But we're going down the other path today, technical analysis. This is all about being a pattern spotter, believing that everything you need to know is already baked right into the price action on the chart.
So, here's our roadmap. We'll start with the absolute basics. What even is a candle? Then we'll learn how to read one, see the stories they tell on their own, and what happens when they team up. And finally, we'll tackle that million-dollar question. Does any of this stuff actually work? All right, first things first. What in the world are these patterns? Well, at their core, they are the language of price action. And they're not new. They were actually invented by Japanese rice traders way back in the 1700s. They're just these simple visual building blocks that let us see what the market is feeling in a single glance. So, before we can start reading the market's stories, we have to learn its alphabet. And that means breaking down the anatomy of just one single candle. Seriously, if you can master this part, everything else we talk about is going to click right into place.
Every candle starts with what we call the body. That's the thick, blocky part. It's the main event, and it tells you two simple things: where the price opened and where it closed for that period. But of course, that's only part of the story.
Because then you've got the wicks. These are the thin lines you see sticking out from the top and bottom. They show you the full journey the price took, the absolute highest high and the lowest low it hit during that session. So now we have the shape, but what about the direction? Well, that's where the color comes in. This is your instant gut check. Is it green? That means the buyers were in control and the price closed higher than it opened. Is it red? That means the sellers won that round and the price closed lower. It's a really simple, powerful visual for who's winning the fight.
So, when you put it all together, you've got the body, the wicks, and the color. You don't just get 4 boring data points. Nope. You get a complete visual story of the battle between buyers and sellers over a single period of time.
Okay, so we know the alphabet now. Let's start learning some actual words. It's kind of wild how much of a story a single candle can tell you about what the market is thinking.
First up, meet the doji. Take a look at its shape. The body is just a tiny little sliver or a thin line. That's because the opening price and the closing price were practically the same. This is the market basically hitting the pause button. It's a perfect stalemate. It just screams indecision.
Now this one. This is a hammer. And look at that long lower wick. This thing tells a story of a dramatic comeback. The sellers tried, they really did, to push the price way, way down. But then the buyers stormed back in, rejected those low prices, and managed to push it all the way back up to close strong. It's a classic signal that a downtrend might be running out of gas.
And on the total opposite end of the spectrum from the doji, you have the Maribozo. No wicks at all, just a pure, solid body. A green one means the buyers were in absolute total control from the second the market opened to the second it closed. A red one, total domination by the sellers. This is a story of pure, undisputed conviction.
So, single candles tell us a lot. But the real magic, the real insight, happens when they start to team up. We're moving from just market words to full-on sentences now, and they can reveal much more complex stories.
I mean, just look at this contrast. On the left, you've got 3 white soldiers, just marching steadily upwards, each one closing higher than the one before it. It's a super clear signal of strong, sustained buying. And on the right, you have 3 black crows, doing the exact opposite, a relentless march down, signaling a powerful bearish trend.
Oh, this is one of my favorites, the bullish engulfing pattern. So you have a day of selling, right? That's the small red candle. Then, the very next day, the buyers step in with so much force that the new green candle completely swallows or engulfs the entire range of the previous day. It's like a visual of a hostile takeover by the bulls. It's awesome. Okay, now for an even more dramatic shift, check out the bullish kicker. The market closes down one day and then opens way higher the next morning. And see that empty space between the two candles? That little void is critical. It's called a gap.
So a gap is what happens when something big occurs overnight. Like huge news or a crazy earnings report that makes the price open far away from where it closed. It signifies a really sudden, powerful shift in how the market sees things. It's a literal leap on the chart.
All right, we've learned the alphabet, some words, and even a few sentences. But this all leads to the one big question that everyone, and I mean everyone, asks. Is this a reliable way to predict the future? Or are we just seeing pretty shapes in the clouds?
Let's just be real for a second. Is what we're doing here a rigorous science with predictable results? Or is it a little closer to something like financial astrology? It's the central debate, and honestly, the answer isn't as simple as you might think.
So, on the one hand, why can this work? Well, a huge part of it is just raw psychology. Think about it. If millions of traders around the world all learn that a hammer pattern is a buy signal, what do you think happens when they all see one? They buy. The pattern can become a self-fulfilling prophecy. It's also about playing the odds. No pattern is a guarantee, but it can tell you that the probability of something happening is now in your favor.
But here's the reality check. Patterns fail. A lot. Why? Because a sudden news event, a surprise jobs report, a war breaking out, none of those things care about your nice, neat little chart pattern. And ironically, if a pattern becomes too well known, it can stop working because algorithms and big players will start to game it.
And that really brings us to the heart of it all. Reading charts isn't about finding a crystal ball. As the source material puts it so well, this is more of an art than a science. You should think of these patterns as a tool, a fantastic one, for understanding market psychology and managing probabilities, not as a foolproof system for seeing the future.
Which leaves us with one last thought to chew on. When you spot one of these classic patterns on a chart, are you really decoding a secret message from the market itself, or are you just seeing the footprints of every other trader who read the exact same textbook you did?